Good afternoon, Portland. It's Jennifer Tim. I'm a real estate wealth advisor licensed in both California and Oregon, and I am honored to be back again this week to share a little bit about what's going on with our real estate market. We'll look at some national and some local highlights. And of course, this is our midweek market brief for the Portland metro area, and this is where smart money watches the market. So let's get right in. Well, there's definitely been a lot in the news about real estate. So we're starting off with policy headlines and housing dynamics. So Trump proposes limits on institutional home buyers, but analysts say it would have limited short-term impact on prices or sales if passed, mainly removing a marginal bid, not shifting the core market dynamics. Institutional buyers only own a small slice of single-family homes nationally, meaning blocking them wouldn't suddenly open the market for first-time buyers. Policy moves to increase mortgage bond purchases could place modest downward pressure on mortgage rates, but substantial, lasting rate relief likely still hinges on broader economic trends, and we'll discuss that in a little more detail. Market conditions entering 2026. Mortgage rates remain near that 6.2 to 6.3% range, lower than recent peaks, but still well above pandemic lows. Experts see rates settling in the low sixes. Home sales climbed in late 2025, with December reporting a notable monthly increase and strongest pace since early 2023. Inventory is slowly rising, but still tight in many markets, a hangover from rate lock-in and constrained new construction. Prices are forecast to grow modestly in 2026. Most estimates range from that 1% to 2 to 4% nationally, reflecting a slower, stabilizing market, and not a bad thing. We're quite happy not to have a crazy real estate market again. Affordability and demand signals. Affordability is improving gradually thanks to slower price growth and slight rate easing, but remains a barrier for many first-time buyers. Pending sales and mortgage application volumes are rising as buyers respond to slightly better conditions, though they're definitely still shy of a full rebound. Construction and housing starts remain below long-term trends, meaning supply shortages won't disappear quickly even if demand ticks up. So what this means is slow and steady improvements. Analysts expect home sales and prices to edge higher without dramatic swings, a more balanced, normalized market compared with recent volatility. Mortgage lock-in is easing. More homeowners are now subject to current market rates, reducing the inventory restraint that plagued markets when ultra-low locked interest rates dominated. Policy may matter more psychologically than materially. Even headline-only proposals can influence sentiment and participation, but supply constraints, affordability, and rate direction remain the core drivers of 2026 activity. Our mortgage rate watch. So this is published by Mortgage News Daily. They headline mortgage rates unchanged despite bond market improvement. So their rate for this afternoon, 6.07% for a 30-year fixed, 15-year sitting at 5.58. You can see the jumbo rate 6.34%, and 30-year VA is at 5.76%. There was great excitement last Friday. The 30-year fix actually dropped below that 6%, and it was sitting at 5.99. But of course, with every day and new reports coming in and new headlines and new policy discussions, it definitely influences the rates a little bit. So we'll just read the first two paragraphs. Trading levels in the bond market directly impact the rates that mortgage lenders can offer. This is why rates moved so much lower after last week's news regarding planned purchases of $200 billion in mortgage-backed bonds. But bonds aren't the only input for rates, and those other inputs can make for days like today, where bonds are noticeably better while mortgage rates refuse to follow. Lots more detail. If you head to their website, you'll be able to see the headlines. They actually publish around about 1 o'clock Eastern Standard Time every day. So, our national smart money insight 2026 looks less like a boom year and more like a reset. Rates stabilizing, inventory slowly rising, and affordability inching forward. Smart market participants will act on data, not headlines. I should have highlighted that and put it in bold. Smart money participants will act on data, not headlines. We're going to see crazy headlines, but we've got to actually see what the analysts how they translate that so that we know that we're talking data. Policy noise can change sentiment quickly, but long-term value is built by understanding fundamentals, rates, supply, demand, and local market strength. We're all about a boring, steady, more balanced market this year. Moving on to our local market spotlights, starting with Portland. Our slight seller's advantage of 39 is down. Median list price 629,000 is up slightly. Price per square foot is up to 315. Inventory went down to 935 homes. Median days on market is up to 98. So it's steady but cautious. That MAI at 39 still favors sellers, but high days on market and 41% price reductions show buyers are negotiating hard. Smart sellers are adapting quickly. Lake Oswego, median list price is just under that 1.4 million. Price per square foot is up to 488. Inventory's gone down to 106. Median days on market is up to 144. And we have a market action index of 34. So luxury niche remains strong, but long days on market, around about 144, signals buyer hesitation. At nearly 500 dollars per square foot, presentation and pricing are everything. Don't list without a strategy. Don't test the market. And then Beaverton. Slight seller's advantage of 41, unchanged from last week. Median list price slightly up, 629,000. Price per square foot, 294. Inventory, 186 homes, has come down. Median days on market unchanged at 84. Our smart money inside buyers have room to negotiate, but shouldn't wait too long. Beaverton is showing steady strength. Sellers, you're in a favorable position, but don't overreach. Be proactive with pricing. And if you're holding property here, it's a great time to request an equity or cash flow review, which of course we would be honored to assist you with. Watch your feed for posts on with some market information on some of the other areas that we cover. In our global perspective, international buyers are returning to the U.S. housing market with a sharp eye on lifestyle stability and long-term wealth preservation. The strength of the U.S. dollar, high-quality assets, and global uncertainty are pushing more capital into U.S. real estate again. There was a little lapse through the pandemic, and now we're starting to see it coming back. So whether it's coastal California, urban, Portland, or luxury second homes, real estate continues to be viewed as a safe haven by global investors. So your smart money perspective, definitely think global and act strategic. And as I am a certified international property specialist and part of the Keller Williams Global Network, I am able to connect you to trusted resources across borders, from those real estate professionals in various countries to attorneys, CPAs, and international lenders. So if you're thinking of acquiring or liquidating an overseas asset, definitely reach out. We'd be honored to discuss what your goals are and help you achieve those. Our wealth building insight is all about plan, protect, and prosper. So real estate is not just where you live, it's how you build wealth. So whether you own one property or several, now is the time to take a proactive look at your portfolio, especially if you own investment properties. It really is time to treat it like a business asset. Here's what smart wealth builders are doing right now. They're creating a real estate plan aligned with their financial goals and timeline. We'd love to assist you with that. They're requesting an equity analysis to understand the true value of their holdings. Again, something we would be honored to assist you with. They are realigning insurance coverage to match current market value. And they're strategizing for Q1 and Q2 moves, refinance, upgrade, invest, or hold. So again, would be honored as your real estate wealth advisor to help you develop your real estate wealth plan for 2026. So let's schedule that. And It's all about talking strategy. Definitely, any which way, we'd love to help you. So these are great ways to reach out. As we mentioned, this is a no pressure, no obligation strategy session where we'll ask you a whole bunch of questions to make sure we understand what your goals are and then help you understand where your properties are currently positioned and what the opportunities for are that are out there, and then we'll help you achieve them according to your timeline and budget. So our disclaimer, the material that we provide is for general information purposes only. I am not a CPA, I'm not an attorney, I'm not a financial advisor. We do get our information from very credible sources. If you choose to move forward with any direction, we will work together with your financial and legal team to ensure that you have all the right information to make informed decisions and help you achieve your goals. With that, thank you so much for tuning in again, and I look forward to seeing you next Wednesday for our next midweek market brief for the Portland metro area.